Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over ratios. Ratios tell us how assets are moving against each other. They tell us value, relative value. It's actually pretty important to understand this because this is where the valuations are. When a ratio is incredibly low in relationship to history, it means that it's cheap and that we should be looking at it for investment purposes. So what I do is I look for ratios that are low. That usually indicates that it's a good investment, or at least it has good value, and then it potentially could be a good investment. And if the market conditions are starting to turn in favor for those ratios to turn, then it becomes an investment. The market conditions are dependent on the real estate cycle. We are going from a recovery phase to an expansion phase, and usually what happens is we see a rotation of money between stocks and bonds because of interest rates go into precious metals, commodities, real estate, and those types of investments. So that's the market conditions. And we've got the ratios all signaling, and I'll show you all of them, that commodities are the spot to be, in my opinion. Precious metals, commodities, and real estate. So what I've got pulled up here is the CRB index versus the S&P 500. If you take a big long-term look at this, I got to get off log because this is just a ratio. You can see that we've got this downtrend line that we've broken to the upside here. If we zoom in, you can see that we're starting to come on up off this bottom and we're about to go into an uptrend. And we've broken out, we've done kind of a return move, and now we're coming back up. And when we break this line right here about 0.005, that's down. Yeah, it's all 0.005 since it's absolutely so cheap. You're probably going to see this accelerate, especially if interest rates go up, because what's going to happen is commodities are going to go up in price while stocks go down in price, and the ratio explodes during that time frame. And a lot of the times, the way that this is going to go up is the way that this came back down. So I think we'll probably get to a ratio of 0.015 quite quickly. So this is just going to continue to go up like this, kind of in the same shape like this was down. And we'll probably see a 10-year bull run in this ratio compressing, or the CRB index outperforming the S&P 500. So right now it is incredibly cheap. We are at the beginning of this bull market for commodities. Looking at the platinum to gold ratio, it looks like platinum is firming up. What this looks like on a big long-term perspective is it's a descending wedge. They usually break to the upside, which it did. Broke to the upside. We're coming back and doing the return move. And we're just bopping sideways, and we have all of the characteristics. See these big up days, small pullback. Big up, small pullback. So the ratio is moving in a way that looks like we are going to move higher. So everything looks really good for platinum to outperform gold in the beginning of this commodity bull market, and that's when it really does very well. If you look at the last ratio, it did very well in the beginning of the bull market. It came down, and then it went all the way till the end of the commodity bull market in 2008, and that's when gold put the hammer down and brought it all the way back down to 1, and then grinded over time in the recovery phase of real estate. Gold outperforms platinum. So platinum has its day in the sun during commodity bull markets, and that's why I'm heavily weighted in platinum, because the ratio is so cheap. It's 0.5. So it's basically a half ounce platinum can buy 1 ounce gold. And this is a very cheap level in relationship to history. The platinum to palladium ratio, incredibly cheap as well, 0.5. I don't even know if it's gotten that cheap before. I mean, this one's pretty cheap. Oh, it's about here, 0.6. And usually during a commodity bull market, this revalues itself quite quickly. And you can see that in 08, 09, that this did very well. I suspect that platinum will outperform palladium this next commodity bull market. At least that's what I'm hoping for, because I loaded up in platinum versus palladium. And usually, I mean, this is a huge move because this goes all the way to 5.5, all the way to 0.5. Very large swing. Platinum to silver ratio, we're coiling up in this corner here. Platinum is incredibly cheap to silver. Usually in the commodity bull markets, platinum outperforms silver. And then towards the middle, silver gets its butt in gear and starts to outperform platinum. So one good swap, or one possible swap, would be to play platinum now, let it appreciate, and then swap to silver in the middle of the bull market. That's if this ratio works out that way. It doesn't mean that every bull market's going to work out the same way. So I own silver and platinum. I'm not putting all my chips in one basket. I own a lot of silver. Silver and platinum both are industrial metals. I view them as more important than gold from the aspect of utility to society. Gold is more important from a monetary aspect. So you should be buying these metals based off of what you think is more important. And then we've got the ratio. If you look, it's got lots of large positive movements in favoring platinum over silver, with these big up days and small down days. I would think, by looking at this, that the ratio would be favorable for platinum to move upward, where platinum outperforms silver. The gold to silver ratio, it's still tracking higher, which means gold's outperforming silver. And guys, this could break to the upside here. We'll see. We'll see what happens. We had a good compression off the beginning of silver coming on down. We're coming on up, and we'll see which way this thing breaks. But gold is outperforming silver at this time. The palladium to silver ratio, silver's outperforming palladium. Palladium made a peak at about 170 ounces. So one ounce palladium, 170 ounces silver, and we're back down to 82 roughly. And this looks like a shoulder that's about to break to the downside. That's what it looks like, and compress. The Dow Jones Industrial Average to gold. And what do we have here? It looks like we are breaking to the downside, guys. That's looking quite positive here. Hopefully I drew this in there. Let me look. It's close, because you could draw it like this too, where it's still hanging on. But it's really close to a break here for the ratio. And we've got bearish. Now, when you look at this one, we're looking for big, large red candlesticks, where you've got big sell-off pressure, and then it fights its way up, and it can't make its way up. And we've got these big, huge downward movements. Bearish engulfing. We're getting these big down days all throughout here. It's a battle, and we'll see what happens. If we break to the downside here in an ascending wedge pattern, which usually breaks to the downside, maybe we can start to compress this ratio where gold outperforms the Dow Jones. In that market condition, with gold outperforming the Dow, that's a commodity bull market for the most part. We got the wings, and this is an ascending wedge. I don't see how this doesn't. It's going to break to the downside, in my opinion, most likely. Last bull market, from 99 all the way till 2011, we had a good compression in that ratio, and then I think we're going to compress all the way back down even further. It's my guess, based off of the market conditions. Here's a gold to oil ratio. We're at 21.55. Zooming in on it, we're breaking to the downside. We're right at this support line. We break down below it. I think we're going to compress to levels probably below 10 by the end of the bull market in oil, or I should say, the end of the bull market of commodities. But this is an anomaly. This is a fluke here, going all the way up here. That was buy of a lifetime. Looking at the copper to gold ratio, we should probably see this thing, well, it's just grinding sideways. It's at 0.0025. And then when looking back at the big picture, last bull market, it broke to the upside where copper outperformed gold. Usually in an increasing interest rate environment, copper outperforms gold. I would suspect that copper is going to break to the upside here and outperform it just like it did here for some period of time. So that's kind of my take on it. Looking at the 10-year yield on a big long-term perspective. Let me get this out of here, guys. It's popping, it's peeking its head through. It's breaking to the upside. So yields are breaking this big long-term downtrend to the upside. What does that mean? It means that we're going to potentially get, if this goes high enough, a very good rotation of money out of bonds and I think out of stocks, because they're all heavily discounted with very, very low interest rates, and the tech sector is going to absolutely hate higher yields. It's going to hate it, and we're going to get that rotation. Looking at the DXY, the dollar, yeah, it looks like we could firm up here and potentially go up. We're kind of at this support line. We broke out, did a return move, and we could potentially move up higher. Maybe, we'll see. And looking at the Thomson Reuters Commodity CRB Index, just straight up priced in dollars, we're moving on up. We've got a nice, good move higher here. Anything with interest rates going up and high inflation, it's going to go into commodities. The money is going to go into commodities. And looking at it from a big long-term perspective, a descending wedge pattern, breaking to the upside, and we're getting nice, good move. And looks like this could be like the first wave. We haven't really had a big pullback, actually. I'd say this isn't necessarily a big pullback, but we're moving on up, and this looks fantastic for a large move higher. So from a ratio perspective, everything looks really good. I'd say platinum looks good. That'd be one to look for investment. Copper looks good. Copper is looking good, and it's breaking to the upside. Actually, let's take a quick look at it. I think I have it down here. It is HG1. Well, actually, we can go through this real quick. Lumber, go look at lumber. It's just rocketing higher. Lumber is on the move to the upside, so lumber's looking really good. Nickel broke its pattern to the upside, and hopefully we can get some momentum here and it keeps going. But nickel is breaking to the upside of its ascending wedge pattern, so this could be ultra bull. Palladium's been kind of pulling back, and that's kind of as expected. We've got cocoa futures doing quite well. They're a little bit in the upper end. We've got wheat futures. They've pulled up. They're doing a little bit of a pullback at the moment. Soybean futures, yeah, nice, good third. This looks like a third wave, or first, third, and a fifth, and then a return move, and now we're coming back up again. So this is the first leg, and then we're probably going to put in a third. Corn futures, again, we had that pullback. Maybe it's an ABC correction. So we might still have one last corrective phase. Copper was down just recently, last trading session, but again, we're above this pattern. It looks good to eventually turn higher. So that's what I've got. That's what I've got for today, guys. Hopefully you guys like the content. Give me a thumbs up if you do. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.